Please note that the information on Retire Vivid referenced in this video is accurate as of August 3rd, 2024. Changes to laws and regulations may make portions of this segment outdated and no longer relevant. Information presented is for educational purposes only and is not intended to provide investment, tax, or legal advice. Please see our full disclosure at the end of this video.
Welcome to Retire Vivid. I'm Karen McCarty. That's Tommy Brightbuck. In today's episode, it's kind of a tough one. I mean, this is what to do when your spouse passes away. I mean, Tommy, first off, I couldn't imagine. You know, you lost your co-pilot, you lost your best friend, and now you got all of this that you got to go through. And so hopefully our viewers, when that day does come, they have something to go to. Right? That's why we're doing this episode today.
It's not going to make it emotionally easier,
right.
But you can make it financially easier or just being more prepared as we go through this checklist. Some things you can do ahead of time just to make that transition a little easier.
A little easier. I mean, because to your point, yeah. I mean, like I said, you lost your best friend. So you have so much you got to do. I mean, the bills still go on. We still got to pay this and we got to do this. So let's go through this. Let's break it up into a number of different things. Let's first start with the checklist of things that you should be looking at. Let's talk about financially, making sure you're okay. And then the third one is your estate plan. So let's dive into the checklist. So the first thing is I would talk to your spouse's employer, okay, if they were still working when they passed away, and what benefits you may be entitled to.
If you're in an age prior to Medicare, maybe you're on the spouse's health insurance, just talk and see if you're entitled to anything, because that will be a change. And
also make sure we get those death certificates. I mean, we want to make sure that I would tell a client if they lost a spouse to get 5 to 10 death certificates, because again, we don't know all the stuff that's out there. And also make sure you contact the insurance companies and update as needed.
Yeah, it's you know, we talk about some of the planning steps you can take. If you keep an itinerary or a roster of where all your accounts are, contacting all of those companies, notifying them of the death, and if you are entitled as a beneficiary, or if it's a joint account, you remove a joint owner, but definitely keep a list or a roster of everything you have.
Well, I mean, also as part of that roster, you want to contact the Social Security Administration office.
Yep, and that will be in the next section when we talk about kind of the financial implications, but the higher benefit will remain, the lower benefit will be going away between the two spouses.
Right, and that's a big one, and we will talk about that because, again, we want people to maintain their standard of living. Also, Tommy, we also want to make sure we have the proper titles in your name, right? So we want, because especially if we had ownership jointly, right? So if we had a bank account that we own jointly, we want to make sure we get that into your name. Also, this is a big one, and I want to spend some time on this. Identity theft. I mean, these masked thieves, this is where they where they attack, right? And so we want to make sure that we prevent that. So one thing that I talk about, we got the 3 bureaus. I want to make sure that you have a login to all 3 bureaus and make sure your credit is frozen.
Right. I mean, you would think, somebody had passed away that they could no longer open an account, but that's not necessarily true. That Social Security number is still out there, still active until you notify it being closed, and then notifying the 3 credit bureau, the rating agencies, just so no accounts can be opened under that deceased spouse name.
Right, and again, I've seen this myself. I mean, where a client came in and said, well, I just had one of the bureaus. You need to make sure you do all 3. Because where would they go to? I mean, where's that void spot at? And so again, be careful of that. So folks, that's something we definitely encourage you to do is you need to protect yourself and go to all 3 of those bureaus and make sure you have a login and just freeze everything, especially notifying them of the loved one that passed away.
You don't need to, add, more financial worry on top of what you're already going through.
Right, and then that next thing too is if you look at everyday bills, right? So your cell phone, right? I mean, in terms of what's going on there. If you're paying for both phones, you also want to take a look at your bank accounts that we just mentioned, your credit cards. I mean, there's a whole slew of things that you need to go through, but that's why it's also important that you talk to your financial professional to walk you through these steps.
If we're talking about investment accounts or bank accounts, each of them are going to have different steps to get that account into your name or follow through on the beneficiary or the payable on death designation. Each of them will have different steps, but you will want to go through all those accounts.
We'll talk about this after the break, but when it comes on the financial end, I mean, your tax status is going to change, where you go from married, filing jointly to single status. And another thing too that I want people to take a look at is your email accounts. Your social media accounts, those things too. Do we keep those open as more of a memorial, or do we shut them down?
Right. It's it may be hard to consider shutting that down, but just another avenue for potential fraud or anything to happen, maybe a consideration to close those down.
Yep. So folks, the one thing here is we're trying to walk through this checklist. We're trying to walk you through these different things that you need to be looking at, from your credit card to your the bureaus when it comes to identity theft, your bank statements. All of these things are very, very important. And again, a lot of people just don't think about this. But when it happens, it just becomes emotionally draining.
Well, and it can be a real shock if you have, possibly the spouse that passed away had handled most of the financial affairs or had bills or different things in your name. This could be a whole new, experience or steps that somebody has to go through. Maybe they haven't done it in a while. And so it can be very wide opening, very stressful. I mentioned earlier, just kind of pre-planning, having everything organized can make that a lot easier.
Yeah, I'm really glad you said that, because sometimes that's just the way that one spouse is the one that handles all the books, and the other spouse, they just don't want anything to do with it. But what happens when you lose that spouse that did all the books? I mean, you are stepping into that role now. That's also why when we meet with our clients, we want that person there, right? So they can hear these conversations, because someday you may be the one that has to be the one carrying the load, right? But that's also why you work with a team. One thing that I'm very proud of when it comes to our company is we have that team approach where you have a tax professional, the one that's doing your taxes, the one that's tax planning. Then you have your financial advisor helping you with your income planning, your retirement plan, how your investments are handled. And then you have an estate planning attorney. Do you have a will? Do you have a trust in place? The question I have for our viewers is, are these professionals working as one? Are they working as a team? I mean, Tommy, the answer is sometimes, a lot of times, no.
Right, and it's all of these are individual decisions, but they all work together. And so you should have a plan that works together as well. All the pieces are put together. You have, everything organized, and it can simplify or give you confidence on what your plan is.
And that's what it is right there, confidence. We're going to talk more about financial planning, estate planning, as we tie into this checklist. Make sure you stay with us right after the break.
Do you have questions about your retirement plan, or do you want to know if you are on the right track? We are here to help. Simply go to retirevivid.com or call the number below to schedule a 15-minute retirement review. You can speak with us about taxes, Social Security, your 401k, or any quick retirement questions at no cost to you. We are here to make retirement vivid. Schedule your 15-minute retirement review today.
Welcome back. If you just joined us, we're talking about, with this episode alone, what to do when your spouse dies. And so it's so important that you have a checklist of things that you should be looking at should you lose your loved one, your best friend, your co-pilot, right? And so next we're going to talk about financially. I want to make sure, and this planning, Tommy, should have been done in advance if you think about it, meaning we're going to talk about financially. I want to make sure that that survivor, the widow, widower, is taken care of financially. That's why it's important that you have a financial plan.
Right, and it's, all the pieces come together. You're going to lose some of the Social Security benefit. You got to review pensions. You got to combine your accounts, figure out what, the budget looks like moving forward with one income and, one set of expenses.
Right.
And so it's important to, hopefully you've laid all those things out together. Just, you'll never know exactly what it looks like, but have an idea of what it looks like. Then you can plan better for that.
Absolutely. So one of the items on the checklist that we talked to is if you are on your deceased spouse's plan of some sort through the employer, I would make sure that your benefits are first taken care of, because health insurance is a big one. Now, if you're on Medicare, Medicare is individual insurance, so you'll have your own Medicare plan, so you don't have to worry about that. You would want to cancel the supplement if you have a supplement, for example, of the spouse that passed away. But we want to make sure that you have health insurance taken care of, number one. Once that's taken care of, Tommy, let's move on to income. You just said something that's very important. Social Security. So for a couple, the survivor or the widow or widower is going to get the higher benefit when it comes to Social Security, but what you just said, the lower benefit is gone. No matter how you look at that, Tommy, that's still a loss of income.
It is a loss of income, and depending on expenses, most kind of fixed expenses are probably going to stay similar. So that is a loss of that lower Social Security benefit, which is one of the reasons why we talk about why would, if we run into people who are both looking at claiming early, is there a way to maybe delay, let one benefit grow, if that's 65 or 67 or 70, but let one benefit grow just to keep that bigger survivor benefit.
And that's why we talk about that. Because again, people look at it and go, I want that benefit now, but wait a minute though, are we looking at the future, right? What if we lose a spouse? This is the stuff we're talking about. And to your point, I like that plan where one spouse takes the benefit, usually the lower one right away, but the other one potentially wait. I'm not talking about waiting until 70. That doesn't fit everybody. But you're looking at it for three reasons. Number one, you're leaving a survivorship benefit for your spouse because the lower benefit goes away. Number two, there's a tax preference. And number three, the survivor benefit as well too. But let's talk about taxes. Let's talk about taxes, because when your tax situation is going to change, where you're going from married filing jointly to single status.
Right, and you have the year the spouse passes away to file married filing jointly. So that comes with higher, just higher income brackets, the doubled or two, standard deductions available to you. So you have that first year, and then once you go to filing single, it's reducing, you're getting one standard deduction, and the income brackets are lower at each level of income.
That's right, that's a big one. So one of the things, folks, that we have done in the past is we have looked at Roth conversions, because again, when you take a look at a single versus a married filing jointly, the game's going to change there.
Right, and it all depends on your income mix, but if the Social Security, the combined Social Security benefits, you keep 75% of it, lose 25% of it, that's still a higher amount. You're not splitting the Social Security in half
Right.
if the benefits weren't equal. If we have any sort of pension survivorship or loss of pension, just depending what was claimed when they took it, but you are going to hit those income levels earlier filing single.
And so that may be a reason why we look at a Roth conversion that year. Potentially, right? If that makes sense. Because we do a lot of these episodes, and so where most people's wealth is in their home and in their IRA 401k. But with those IRA 401ks, they're also subject to the required minimum distribution. When we turn 73 or up to 75, you're forced to start tapping into that. Does a Roth conversion make sense? You just mentioned pensions. Did your spouse have a survivorship benefit on your pension? We work with a lot of federal employees where health insurance is tied to that pension. So again, that's something else that you want to take a look at, because are you getting 100% survivor of what your spouse was receiving, or 50%, 75? What is it?
And that's why hopefully everyone was involved in the initial decision. You evaluated kind of all options, made the best decision for you.
Right.
But yeah, once a spouse passes, the prior election is finished. For the most part.
That's right. That's right. And again, that's why we encourage all of you, whoever you use. I mean, for clients that use us, we feel that it's important that you have a plan. Meaning, what is health insurance going to look like when you retire? When can you retire? I mean, that's a big one. And also, are we emotionally ready to retire? The other question is what is your income plan? When do you take Social Security? What does your IRA 401k look like? Meaning in terms of withdrawal, a withdrawal strategy. And also not only that, but how do you save money in taxes? I mean, this is why we talk about especially with this episode of losing a spouse, especially if that spouse is not involved in this process, that you have a team member for them to fall back on. I encourage everybody to make sure they have a financial plan in place. Not only that, but we'll talk about estate planning next. But Tommy, I mean, that's what we do here.
It's really important that, it involves both spouses if you're talking about a financial plan. It involves both people, whether they, want to know what's going on or not. It does involve both people. And so that's why it's so important to at least know enough to know kind of where you're going, where you're at, where you're going. And you don't have to make the day-to-day decisions necessarily, but at least have an understanding of what maybe retirement looks like now, what it's going to look like in 10 years, what it looks like when that spouse passes, and you have that emotional, the emotional decisions and stress associated with that you at least feel comfortable knowing you have a plan in place.
That's exactly right. And that's also why we offer a 15-minute retirement review. So during this review, I mean, this is where people have the opportunity to ask us these questions, whether it be about financial questions, it could be about Social Security, it could be about taxes, you name it. There's no cost for that. I mean, it gives people the opportunity to ask a simple thing where it could go a long way. And so, Tommy, I encourage everybody to take advantage of that. Next, we're going to talk about estate planning, wills, trusts, power of attorneys. Make sure you stay with us after the break. Welcome back. So we're on the final stretch here, what to do when your spouse passes away. And so we just talked about the checklist. We want to make sure you're set financially, the benefits that you're entitled to. Now we're going to talk about the estate plan. And this is something that hopefully people had in place prior to that spouse passing away.
Right, and it's, hopefully you have that plan in place. If everything kind of is held jointly or has beneficiary designations, it doesn't as much come into play when that first spouse passes, but definitely when there's one remaining spouse, one individual, you need to review that estate plan.
Absolutely. And so let's talk about estate planning, Tommy. you got the wills versus trust plans, but I think it's first important to talk about the foundational documents.
Yeah, three foundational documents, whether you go a will-based route or a trust-based route. You have your financial power of attorney and healthcare power of attorney. That is giving the decision-making responsibility to an individual when you can no longer make, either financial or healthcare decisions for yourself. And then you also have a living will, and that is if death is imminent, what do you want, life-saving procedures or not? And so those are foundational documents regardless of whether you look at a will or trust-based estate plan.
And we would definitely encourage people to get them. I mean, especially the financial power of attorney, because how many times do people say to us, hey, I'm just going to put my son Jerry on my bank account? Don't do that. Because here's the deal. What if Jerry gets a divorce? What if Jerry gets sued? Right? They can technically go after half of that asset. So a power of attorney will avoid those type of issues.
Yes, that joint owner or a secondary owner becomes a joint owner of the account and opens up to any of their creditors or
Right.
You mentioned divorce. Whereas the financial power of attorney just allows that decision-making ability, not becoming a joint owner.
Well, let's talk about this one, a traditional IRA. Let's say the traditional IRA is in the wife's name. Husband calls in, says, hey, Cam, liquidate X amount of dollars so we, and send it to our bank account. I can't do that without, again, talking to the account owner. Power of attorney documents, depending on when the document's effective, can also make that difference. And folks, real quick, I want to be clear. We're not attorneys here, okay? But again, it's just important that we have these conversations and you need to know this stuff.
Right, and in meeting with that estate planning attorney can make those final decisions
Right.
for you. We just kind of want to give you some things to think about and kind of point you in that right direction.
And experiences that we've been through. I mean, I know we look young, but we have been through a time or two when it comes to this stuff. Okay, we just talked about the foundational documents. It's also important that you have a will or a trust-based plan. The question is what makes sense for you. Tommy, let's walk through a will first. Why somebody may pick it, and then we'll talk about a trust.
Yeah, a will is a document detailing where you would like any accounts or property to go when you pass away. Wills go through probate, which may be one of the cons of a will-based estate plan, is that it does go through that probate process. That's court administered, there's no privacy, but it's typically a simpler document, simpler process to set up, less expensive up front, and then if it's in order, the assets will get to where they're supposed to go to.
Right, and a will it can be a good plan for people as well. The key is remember will equals probate. I mean, it's just that simple, because now here's the thing. Somebody will say to me, well, hey, Cam, I have a will. I have beneficiaries on all of my accounts, on my bank accounts, my brokerage accounts, my IRAs, my 401ks, and I have a home. Why do I even need a will? Shouldn't I avoid probate? This is such a big deal. You just mentioned something, or I just said something where if somebody said, I own real estate, because you have real estate, that will rope everything else into the probate process, and that will be included onto the inventory that in terms of what an attorney can charge when it comes to probate. Where a trust, if you put the house inside of a trust and you have beneficiaries and all of this, you can avoid probate. That's a big one that I think a lot of people don't understand.
Yes, it's very important to, if you are renting or leasing, that will may avoid that probate process. But owned real estate in the state of Iowa gets everything roped back into probate.
Exactly. I mean, we did an episode just on estate planning, so we're just going through the highlights in terms of the time that we have. So now we just talked about a will. Now let's talk about a trust. Let's just talk about a revocable trust, right? A trust that you can revoke, that you can change. There's also irrevocable trusts. That's, I think, another conversation down the road. But the reason why somebody may pick a revocable trust is they want to avoid the probate process, and things are not handled through the courts anymore. It's handled through trust administration. Yeah,
it becomes a more private process, and depending on the attorney you're working with, that trust administration process, trusts are typically a little bit more expensive to set up on the front end, but can avoid the costs associated with that probate process, saving money, streamlining the process, can potentially be done quicker to get those assets out to the beneficiaries through a quicker process, and just the privacy.
I'm glad you said. I was getting ready to jump in on that. The privacy end of it, and is handled more in a private family setting. I mean, there's a lot that we talked about today. I mean, this episode is designed to give people that lost a spouse some form of a reference guide in terms of what to do. So let's recap. We want to have a checklist, right? All the things that you need to be looking at when it comes to credit cards, your cell phones, your utilities, ownership of accounts, the Social Security Administration's office. We want to make sure that you're financially secure. I mean, in terms of your income that you're accustomed to bringing in. And of course, you want to make sure that the estate plan needs to be updated if you have one. If you don't have one, you need to get one right away.
It just stresses the importance of kind of being organized up front. A lot of times we will run into clients who have gone through, a process maybe with their parents, if it's probate or administration, but it's a disorganized process, and it just spurs them to want to get things in order so that it's simpler the next time.
That's exactly right. And again, folks, that's why we're doing this show. I mean, it's on a variety of different things that you need to know about during your retirement journey. And unfortunately, this is one of them, in terms of losing your best friend. But I hope you got something out of today. And so if you ever have questions on anything, we are here to assist you. And we also have that 15-minute retirement review. But again, thank you for watching us. We are on every weekend helping you get retirement ready. We'll catch you next time on Retire Vivid.
Cameron McCarty and Tommy Breitbach are investment advisor representatives of Vivid Wealth Management, a SEC-registered investment advisor located in Des Moines, Iowa. Investment advisory services are offered through Vivid Wealth Management, LLC. Insurance products and services are offered through Vivid Tax and Wealth Advisors, and individually licensed and appointed agents. Tax planning and preparation services are offered through Vivid Tax Center, LLC. The preceding entities are affiliated. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Case studies and examples presented are hypothetical and used to demonstrate a concept. These studies do not represent actual clients or results. Similar or even positive results cannot be guaranteed. None of the entities above are affiliated or endorsed by the Social Security Administration or any government agency. Information expressed does not take into account your specific situation or objectives, and is not intended to provide investment, tax, or legal advice. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Investments involve risk and, unless otherwise stated, are not guaranteed.